even as President Trump announced a new 35% tariff on select Canadian imports, taking effect August 1st. The president is pointing to Canada's lack of fentanyl enforcement and the unfair levies that the president says are put on American dairy farmers. Canadian Prime Minister Mark Carney posted this on X. The country is making progress on fentanyl. Ottawa remains committed to working with the United States, writes the Prime Minister. Joining me now is ProChain Capital President David Tawil. David, good to see you. Thank you so much for being here.
Good morning, Maria.
So President Trump says the products coming out of Canada that are compliant with USMCA will be exempt from this new tariff, but other products will be facing a 35% tariff coming into America. Your reaction?
It is great that Trump is able to play hardball on so many fronts, on so many different policies, on so many issues all at once. Let me remind viewers, this is an absolutely stark contrast to the Biden administration. Canada is the U.S. largest export partner and its second largest trade partner overall. This is an incredibly important relationship from a dollars and cents perspective, and it behooves our president to go ahead and get the best deal he can for the American people and for American industry. And so if that means that he needs to go through multiple rounds of negotiation and needs to play tough with them, well, then that's better for us, and we should applaud him for that.
Yeah, I think that's right. I agree with you, David. But then you've got this whole group of people that claim, oh, there's all this uncertainty. We don't know how much it's going to cost us. We don't want to put our money to work long term in terms of investing in things because we're not sure about the tariffs. What do you say to those CEOs who continue to claim they don't have clarity?
Listen, I agree with that. Those CEOs themselves go through negotiations every day that are protracted and are multi-rounded. And therefore, they don't know exactly what the outcome is going to be, but they have a good sense. And so therefore, they take cautious steps on the basis of their intuition and what their expected outcome is. I expect them to do the same. And by the way, same thing for market participants. You're not happy with the uncertainty potentially that there may be for the next couple of months. Okay, so take some of your money and put it on the sidelines. You don't need to be fully invested in this market. That's okay. That's an understandable position. But to say I'm totally out or I can't do business and I'm fully debilitated because of the uncertainty, I'm sorry. That's not an appropriate level of leadership.
Yeah, and little by little, we are getting the clarity. President Trump is being tough. And that's the bottom line. If there are non-tariff deadlines, expect the president to take notice and react. Meanwhile, David, you've been spot on crypto. Bitcoin skyrocketing to an all-time high this morning, above $118,000. Spot Bitcoin ETF taking in over $1 billion in net inflows as of yesterday. And of course, next week, we're looking at something called Crypto Week. Congress is going to be moving to pass lots of legislation, the stablecoin legislation, market structure bills. You've predicted on this program that Bitcoin is going to $250,000 by the end of the year. That's only 6 or 5 months away, David. You still sticking with that?
I'm sticking with it, Maria. I mean, we've seen a pretty good rally over the last 48 hours. As you just said, the market's taking a breather this morning, but crypto is not. It is charging higher. I expect that Crypto Week in the House of Representatives next week will go ahead and bring a bunch of legitimacy to the asset class. The Genius Bill, which is going to go ahead and put stablecoin legislation in place. It looks like it's going to go ahead and get passed and turn into law. The Clarity Act, which gives market structure, is also going forward as well. And there's a real strong push, starting from both sides of the aisle now, to go ahead and get crypto to be front and center. We have a number of states in the United States adding Bitcoin to their balance sheet, most notably recently Texas. And I think that that's going to go ahead and continue. We're going to see the same out of sovereigns around the world and out of corporations, which have been adding Bitcoin and other cryptocurrencies to their balance sheet. Maria, I also have to add, Ethereum above $3,000 this morning, also charging much higher.
Yeah, you're right. And I guess that's what happens when you have an administration that is supportive of Bitcoin and of crypto, and a Congress that's moving so aggressively to come up with the framework in terms of legislation. Let's talk about the backdrop. This macro story in the U.S. Interest rates this morning are below 4.4%, at 4.38% on the 10-year, up 3.5 basis points. You've got Fed Governor Christopher Waller saying that the Fed is shrinking its $6.7 trillion balance sheet, looking at a hypothetical decline to $5.8 trillion. That would be a big deal. He says ongoing quantitative tightening could see reserves falling to just below $3 trillion. Waller is also signaling that he's open to a rate cut at this month's meeting. Happens at the end of the month, July 29th. White House Budget Chief Russell Vogt, meanwhile, joining the list of Trump officials blasting Jay Powell. Now he's being accused of misleading Congress and moving forward with a $2.5 billion renovation of the Fed headquarters. Vogt accusing Powell of mismanaging the central bank budget, ignoring OMB guidelines, and wasting taxpayer money. David, it sure feels like we're going to get a new chairman of the Fed before his term is up. What do you think?
Yeah, we definitely will. I think the drama is interesting. Certainly it's something that we need to follow. But the real story here is two things. First of all, we haven't seen inflation out of tariffs. And the question is whether we will, because tariffs haven't really bared down yet. They haven't really gone into full effect. We've been in negotiation until now. We've been on and again, off again in a bunch of countries. When the rates are finally set, will that lead to inflation, or worse, will it lead to demand destruction? And we need to keep our eye on that. Separate and apart from that, regardless of what the Fed will do with whoever leads the Fed, with respect to the short end of the curve, we need to keep our eye on the long end of the curve. The 30-year, the 10-year and the 30-year are really the most important. 30-year, because it finances and sets the price for so many important assets, including real estate of all kinds, commercial, housing, and so on, private equity buyouts, long-term debt for corporations. And so we need to watch whether the curve steepens. I'm not necessarily so concerned about the absolute rate, which frankly, hopefully will not bust beyond 5% on the 30-year, but I'm concerned about the steepness, because once the steepness gets to a serious level, countries around the world and lenders to the United States will start to take notice that the short-term rates are so low versus the very long-term rates. That indicates trouble on the long-term horizon. So we need to go ahead and start beating that down with good growth in this country. That is what this presidential administration is hoping for, as well as the American people should be rooting for, that we have growth that beats down the long end of the curve.
Yeah, I mean, look, that's why President Trump is trying to get Jay Powell to cut interest rates, because the cost of our debt is $1 trillion more than we spend on defense. We've got $9 trillion in debt that's rolling over this year. He doesn't want to pay long-term, debt that's more expensive than he should. Meanwhile, we've got a macro story that's showing zero inflation, 1% inflation, John. We'll get the CPI and the PPI out next week, as well as the start to earnings season. Those will be market movers, John Lonsky.
CPI and PPI will probably be somewhat higher than they were in the month of May, but I don't think that's going to upset the credit market to any extent. The story going forward is the degree to which these higher tariffs boost price inflation. As David said, there's no evidence where tariffs have even lifted import price inflation. This may sound crazy, but in the month of May, the annual rate of import price inflation, according to the Import Price Index, was 0.2%, 0.2%. If we take out petroleum products, it goes up to a very tolerable 1.8%. It very well might be that tariffs do more to squeeze profit margins than to add to consumer price inflation.
Yeah, and don't forget all of the efforts to get prices in the oil market down, with the president's policy sending gasoline and crude oil lower. That's the main issue with inflation, so that was incredibly effective. David, great to see you. Thank you, sir. David Tawil joining us. We'll see you soon.